Everybody, and welcome to this earnings call of LIC Housing Finance. We have with us Mr. Vinay Saha, MD and CEO, and Mr. Sudipto Seal, Deputy CFO, to discuss the quarterly results. I would request Mr. Saha to take us through the key highlights of the quarter, post which we'll open the floor for Q&A. Over to you, sir.
Good morning, and welcome to the post-earnings conference call of LIC Housing Finance Limited. As you would be knowing, LIC HFL declared its Q3 FY19 results yesterday. The key highlights of the results are as follows. Revenue from operations, rupees 4,414 crores as against rupees 3,587 crores.
Sir? Sudipto, sir, are we still connected? Ladies and gentlemen, please wait while we just try to check the line for the management. Sir, are we still connected? Ladies and gentlemen, please wait while we just disconnect the management line because the line seems to be unoperational. I'll just disconnect the line and I'll call them back. Thank you. Ladies and gentlemen, we have the line for the management reconnected. Please go ahead.
We'll start from the beginning. Hello?
Hello?
Yes, sir, please go ahead.
Yeah. Good morning and welcome to the post-earnings conference call of LIC Housing Finance Limited. As you would be knowing, LIC HFL declared its Q3 FY19 results yesterday. The key highlights of the results are as follows. Revenue from operations, rupees 4,414 crores as against rupees 3,587 crores for the corresponding quarter of the previous year, a growth of 23%. Outstanding loan portfolio at rupees 1,81,698 crores against rupees 1,56,176 crores, reflecting a growth of 16%. Individual loan portfolio at rupees 1,70,334 crores against rupees 1,49,986 crores, which is up by 14%. Disbursements at rupees 12,778 crores as against 12,292 crores for the same period in the previous year, a growth of about 4%. For the nine month ended 31/12/2018, disbursements were rupees 36,666 crores, reflecting a growth of 15%. Net interest income at rupees 1,042 crores as against rupees 738 crores, up by 41%. Net interest margins at 2.33% as against 2.35% for Q2 FY19. Profit after tax for the quarter stood at rupees 596.31 crores as against rupees 475.10 crore, a growth of 26%. The quarter just concluded was one where the NBFC HFC sector witnessed an unprecedented liquidity squeeze of a magnitude not seen in the recent past. Several initiatives taken by the government regulators have helped stabilize the situation to some extent. The company, however, has not faced any adversity and has accessed all types of fundings avenues throughout the period under review. On the business front, we have disbursed 12,778 crores, which shows a growth of about 4%. Overall, we have seen good growth from some locations in central, eastern, and some parts of western and southeastern regions. In the home loan segment, the company disbursed 9,177 crores, a growth of about 3%. Disbursements in individual non-home loans segment was flat at about 2,400 crores, whereas the builder loan segment, the disbursements were 1,238 crores, a growth of about 28%. During the quarter, we have been very selective in taking exposure, and we believe the current environment will allow long-term players like us to improve on our market share. To that end, during the quarter, we have received proposals for portfolio buyouts, takeovers, and are evaluating the same based on various parameters like quality and valuations. Overall, our overall disbursements for 9 months continue to record a 15% year-on-year growth, which is in line with our projected growth for the year. On the affordable housing front, under PMAY CLSS schemes, the company continues to do well. During the third quarter, the company recorded a disbursement of nearly 8,500 accounts, as against 6,000 accounts in the corresponding period of the previous year. In value terms, the disbursement in this segment was rupees 1,646 crores against about 1,000 crores for the corresponding quarter. As a share of incremental disbursements in the retail segment, it works out to be 17% in number and 14% in value terms. On the portfolio growth front, the total portfolio recorded a growth of 16.34%, the highest in several quarters. Pursuant to the introduction of Ind AS, the companies are required to report expected credit loss on their loan assets and provisions thereof. In terms of asset quality, as mentioned earlier, in line with the Ind AS, the company has transitioned to the ECL model based on exposure at default. The loss provisions are in line with the historical loss rates of the company, which is one of the lowest in the industry. This quarter, there is a net reversal in the ECL provisions to the tune of 3.14 crores. For 9 months, the total ECL provisions reduced from 407 crores to 247 crores. The asset quality has remained stable with stage 3 exposure at default at 1.25%, marginally down from 1.27% as on September 2018. On the cost of fund side, though there has been a sharp increase in the interest rates in the system following the liquidity squeeze, we were able to contain the increase in the cost of funds to a considerable extent. During the quarter, the weighted average cost of funds has increased by about 15 basis points. However, we have been able to offset the increase by passing on the hikes. During the quarter, the company hiked its PLR by 20 basis points, making it a total 70 basis points PLR hike during the current fiscal. The overall spreads have, as a result, shown a year-on-year increase of 15 basis points and a sequential increase of 6 basis points. During the quarter, we have also completed a recruitment of nearly 300 employees to augment our human resources. With this brief introduction, I would like to invite you for your queries.
Thank you. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Shubhranshu Mishra from Motilal Oswal Securities Limited. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. I wanted to understand the movement of NPAs in the corporate book. It has decreased on a QOQ basis. So if you could tell me the slippages and the recoveries.
Yeah, we have experienced some reduction in it. There have been recoveries in 5-6 small accounts.
What's the amount for that, sir?
That would be about 60 crores or so.
And any slippages?
No.
Right, sir. And we've noticed the disbursement for builders going up. So one is that I want to understand the outstanding number of accounts that you have in the builder portfolio and the number of deals that we did in this particular quarter and 9 months of this year.
Total number of accounts that we are servicing is about 256 or so.
Right.
During the year, 9 months, we have added about 38 accounts.
Okay.
Quarter would be about 6 or 7. Quarter actually, we are showing some growth in the project,
Right.
but it's very less as compared to Q2.
Right. And if we have to qualify these additions in third quarter, so are these coming from other HFCs, banks? Where are these portfolio takeovers coming
Only
from?
2-3.
Okay, which are coming from large HFCs?
Yeah, as I said in this thing, we have been very cautious actually.
Okay.
Whatever the general feeling in the market is that there's a huge opportunity for LIC HFL also to take over.
Right.
But some of the evaluations that we did in this quarter, they're very risky things, which we were not, as it is, we were not doing earlier also. And we have not taken over any of the risky ones, which we felt were risky as per our underwriting norms.
Right, sir. And just a bookkeeping question, sir. If you could repeat the disbursement mix for home loans, LAP, and builder loans.
Total disbursements were 12778 crores. Home loan was 9170.
Okay.
Developer was 1238. And this home loan, of course, includes about 2000 crores of
2,000 crores of?
no, the 1238 crores of, sorry. That's separate, of course. Yeah, I give the 9170 is home loan.
Right.
And 1238 is this.
LAP. Right.
Yeah.
Sure, sir. Thank you for your time.
Thank you. The next question is from the line of Jignesh Shial from MK Global. Please go ahead.
Hello.
Mr. Shial?
Yeah, hi. Am I audible?
Sir, your voice is on a lower side. Can you please speak
Yeah,
up?
now is it better?
Yes, sir. Thank you so much.
Sorry. Hi, sir, and thanks for the opportunity. You said there had been a decline in ECL provision. Can you give me the numbers of the ECL provision, please?
Yeah, see, if you see the, this is Sudipta here.
Yeah,
ECL provision for the quarter, there is a reversal.
Okay.
The reversal is 3.14. And if you see for the 9 months, there has been a decline from 406.99 crores in the 9 months of the previous year. As compared to that, it is 247 crores this year.
Okay. And any reasoning for the reversal would be what could
actually, if you look at it, the ECL provision of the previous year is actually based upon the delinquency at that point in time, and after that there were a couple of accounts where we had received some resolution. So to that extent, it will not be required.
Okay, understood. And moving towards your liability franchise, so have you been, have you done any getting refinancing from the NHB? Has there been any incremental coming out from there, or the things are the similar phase what it had been earlier? Just little detail on your liability breakup.
On the liability front, in the third quarter, we have raised almost 20,000 crores in terms of non-convertible debentures of various tenors.
Okay.
And we have also raised commercial papers. This is almost, for the quarter, it is 9,000 crores, little less than 9,000 crores.
Okay.
And the retail deposit will be around 1,000 crores. Apart from that, we have raised money from the banks, line of credit as well as term loans from banks we have withdrawn. And as far as the NHB refinance is concerned, there is a application which is, I would say, almost been approved. So that will come within a couple of days.
Okay. In this 20,000 NCD, what will be the cost?
The cost average cost was a little less than 9%, because most of the high cost funds which we had raised in the first few weeks of October were in excess of 9%. Okay. Today, the same rates would have come down by almost 50 basis points, at least 40 basis points.
Okay, understood. And what will be the movement on yields? I mean, has there been any hikes given during the last quarter, or how is it on your lending side, I'm saying?
On the lending side,
October, we had increased the rates on the retail home loans by 10 basis points.
Okay.
Then again, 1st January, we have increased on the retail side by 10 basis points. That is the home loans by 10 basis points. And on the builder loans as well as on the non-home loans, that is the LRD LAP, we have increased by 20 basis points. So for this financial year, the total increases on the retail individual home loan book, which is till now almost 80% of the book, the total increases have been to the tune of 70 basis points.
Okay, perfect. Yeah, that's helpful, sir. I'll come back to the queue for further questions. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Akash Jatani from HDFC Securities. Please go ahead.
Hello.
Yes, sir. Please go ahead.
Yeah. Hi. Thank you for taking my question. My first question is on the developer book. So, given the current developments, how do you see, the developer book in terms of, is there any stress that is building up? While I know that you have done about 5 to 6 recoveries, as you said, but what is your sense on this?
No, overall, we have been following up, reviewing each and every big or small developer loans very closely, especially with view to whatever was the liquidity position squeeze during Q3.
Correct.
And going further ahead, we would not want to also, and currently we are not expecting also any of the big accounts going into default.
Okay, great. And my second question is on competition in both the individual loan and LAP space, the home loan and LAP space. So how do you see it from other HFCs, NBFCs and banks?
No, nothing has changed much, I would say, even in Q3, because home loan front, we have been getting most of our growth, better growth from Tier 2, Tier 3 cities and central, eastern, some parts of southeastern part of the country. And there the competition level has been at the same level. For LAP and other things, probably if we see rate-wise also, the HFCs are placed at par. So competition-wise, it's at the same level. Banks, of course, have been more active, especially in Q3. One factor which would interest you is that especially in Q3, our number of amount of cases which were taken over by other HFCs, it went down by 25%, and overall for the year also it has gone down by about 18%.
So this should be year-to-date,
25%
number?
Balance transfer cases.
Yeah. Okay, great. That answers my question. Thank you so much. Yeah.
Thank you. The next question is from the line of Bunty Chawla from PNK Securities. Please go ahead.
Thank you, sir, for giving this opportunity. Just needs few data points if you can share with me. So, incremental, what is the incremental yield on assets currently?
Yes. What other data?
And incremental cost of funds, both, sir.
The incremental cost of fund for the 9 months is 8.38%.
8.38.
And for the first 9 months, the incremental yield on the assets is 9.94, 9.95.
9.95.
Annualized, yeah.
Oh, okay, sir, okay. It is for 9 months, you are saying, right?
I'm saying for 9 months, yes.
Oh, okay, sir. And, sir, can you share, there has been a slightly increase in the gross NPA levels on the individual part. Is it something, can you share on that? On a Q1Q basis, sequentially.
Gross NPA has gone up, but the contribution has by and large come from the retail, this thing. And we are confident that it will be curbed. No actually specific trends or nothing was observed that it's coming from a particular area or a particular segment, something like that. The project has not contributed to it.
Right, sir. So lastly, now it seems to be liquidity is slightly better currently in this quarter. So what will be the approach? Because we have seen some cautious approach in terms of disbursement on the individual portfolio in Q3. What will be the sense in Q4 for the similar?
No, we have been cautious. When I made the statement, it was especially with regard to the takeovers.
Right.
That where we were being approached for.
Right.
Otherwise, whatever we were doing it, depending on our SOP, our underwriting standards, our due diligence, we will continue disbursement at the same level.
Okay. Okay. Thank you. Thank you very much, sir.
Thank you. The next question is from the line of Anirban Sarkar from Principal Asset Management. Please go ahead.
Yeah, hi. Thank you, sir, for the opportunity. I have three questions. First, I see this line item called net gain on derecognition of financial instruments under amortized cost category. If you could just help me understand what exactly this refers to, derecognition of financial instruments. That's the first one.
Yeah.
The second one is that in your notes to accounts, I see in the second point you have said that there is a loss amount of modification of loans amounting to 15 crores for 9M FY19 and around 160 crores for 9M FY18.
Yeah.
So is this amount for 9M FY18 included only in the third quarter number, or has these been recognized across the 9-month period?
Yeah.
That's the second question. And the third question is regarding a sharp increase in the proportion of floating rate loans on your book from 82 to 93% in the third quarter.
Yeah.
So is this because of conversion of fixed to floating rate loans which were given 3 years back? And if yes, then what proportion of such loans still remains on your balance sheet?
Yeah. So we'll start from reverse order.
Yeah.
Regarding the fixed to floating composition, as of now, most of the offtake which is happening on the floating rate side. We do have products on the fixed and semi-fixed, but most of the preference is towards the floating rate side. So,
100%.
almost entirely you can say whatever new business is getting originated is happening on the floating rate side. So that is the composition.
I got that part. What I was meaning to ask is that what proportion of these loans still remain on your balance sheet?
I'm completing it. it. So, very small portion of the conversion is left. Almost, I would say it's almost not there.
Okay.
It will be less than a couple of percentages.
All right. Okay.
Because whatever those convertible loans we had given earlier, the fixed to floating converted loans, we had stopped distributing those loans about 3 years back. So whatever was the residual, I think not even a couple of percentage will be there for this. Now coming to your other query regarding that few changes and few new line items which you would have seen in this quarter as also in the couple of last quarters. It is because of the transition from the Indian GAAP to the Ind AS. Now as per the Ind AS, all loans, all home loans or any kind of loans will be treated as a financial instrument. And whenever any of the terms and conditions of those financial instruments are changing, that gain or loss, whatever, has to be appropriated in that particular quarter in which the change would have happened for the balance period of the loan. For example, and this is actually more in terms when the rate of interest had been going down. If you recollect, in the last calendar year of 2017, there was a huge reduction in the lending rates following a lot of rewriting requests that we received from customers. Because obviously there was a lot of, I would say, the interest rate trajectory was downward going. So when that had happened, the loans were rewritten to a lower rate of interest. As per the Ind AS, one will have to actually account for the reduction in the earnings on that financial instruments for the balance part of the life of that loan. And it has to be taken in the quarter in which it will be taken. So most of it would have happened in the end of Q2 or Q3, for which that accounting had to be done in the previous year's corresponding quarters. So that is the genesis of this particular line item.
Sure.
And then coming to the other question that you had regarding the derecognition of financial instruments, see here under amortized cost category, see under the Ind AS what happens is that earlier there were certain costs and incomes which we were accounting in the year of receipt. the incomes were processing fee which we were collecting from our customers. In the year of receipt, it would be accounted. And similarly, whatever expenses we would have incurred for originating these loans, and which can be directly attributable to these specific loans, like, for example, commission paid to the intermediaries or agents for originating the loans. So those earlier were accounted in the year of receipt. Under the Ind AS, that has to be amortized. So as and when those loans get prepaid or closed, the unamortized part, the one which is amortized but not yet accounted for, will have to be taken in that particular line item. These are the changes which have been required because of the transition from the Indian GAAP to the Ind AS, and probably one would expect that over the next 1 quarter, once the full 4 quarter results under Ind AS have been rolled out, next year the numbers will be, I think, much more smooth and more comparable.
Sure, sir. Thank you for the explanation. Just on the part about the modification of loans, where the amount was 159.7 crore for the 9-month period.
Yeah.
So has it been recognized across the 9-month period, or has it been recognized in the third quarter of?
It is 9 months actually. For the full 9 months, it has been impacted. This was a new requirement of the accounting standards.
All right, fair enough. Thank you, sir. Thanks. That answers all my questions. Thank you.
Thank you. The next question is from the line of Kunal Shah from Edelweiss. Please go ahead.
Yeah. So firstly, in terms of the increase in GNPLs on the individual category, was it from LAP as such, and how has the LAP portfolio behaved within the overall individual pie in terms of asset quality?
No, as I said before also, it's the contribute, the rise is basically home loans also. LAP also, the levels are around the same. It's slightly higher than the home loans, but increase is not only due to LAP. Even the home loan portfolio has also contributed to that.
So what is it, 0.93? So how do we break between the home loan and the LAP currently and compared to Q2?
See, actually, the 93 is on the entire retail piece, but if you disaggregate it, the individual home loans and the non-home loans, it will be around, say, 0.8, 0.76, so it's almost 0.8% for the home loan piece, the individual home loan piece, and probably to that extent, the non-home loan piece will be slightly more than 0.93. Because the weightage for the home loans is much greater.
Yeah, and how was this in Q2?
Q2 also proportionately pro rata it would have been same.
Okay. So maybe 11 bips, 12 bips increase, that's coming both in home loan as well as maybe some.
Yes.
Okay. And in terms of incremental cost, so you highlighted for the 9 months, but if you look at it in terms of the incremental cost, what is it? And in terms of the mix of the borrowing, what we look today in terms of NCDs, banks and all, so how do we see the proportion changing?
See, actually, if you look at it for the first half, for the first 6 months, that is April to September, because of certain, I would say, regulatory changes on the bond market, electronic bidding system, the bond issuances were almost nil. Actually, it was not there. But from 1st of October, the bond issuances have been quite strong, and despite the tightness in the overall market, we have been continuously issuing bonds of every single tenor and at benchmark prices, literally. So that portion of the borrowing will continue even in Q4. In Q4, we will probably also look at more in the retail deposit side. As far as the commercial paper is concerned, you would recollect that in the second quarter earnings call, we had said that at that point in time, the commercial papers were 9.2% of the total liabilities, and we had given a very clear guidance that by December, we will bring it to around 5% level, and as of now, it is exactly 5%. So there is a specific headroom available there also, and we have not faced any issues in raising money from any of these markets. Additionally, we are also exploring some other avenues. For example, we are working on an external commercial borrowing with some of the banks. So if the pricing, etc. fits in, we might also go in for that in the next quarter or in current, this is Q4, or in the first quarter of the next year.
Okay. And between bonds and banks, how are the rates today? Incremental borrowing cost?
See, we are still receiving money from the banks at PLR plus MCLR plus zero spread. So that continues, and average, if you look at it, the bank's MCLR will be in the ballpark of around 8.4 to 8.5. In terms of bond markets, NCDs at the shorter end, about 10 days back, we had done a short-term issuance at around 8.5% coupon. That was about a 2-year paper. We have done a 10-year paper after that around 8.75 or 8.8. So I would believe that the yield curve will remain within that range. That is as far as the NCDs are concerned. Shorter end, the cost of fund has come down significantly. In the early parts of January, we had done some commercial papers for about 2.5-3 months, which we had raised at less than 7% for 6.85%.
Okay. So in terms of margins, given cost is coming down and we have raised the rates as well, so are we expecting the improvement, and where should we see it settling down now?
The margin improvement, if you look at on the spread side, there has been a sequential improvement of 6 basis points. Year on year, 15 basis points improvement has been there on the spreads. And the trajectory certainly points towards improvement, and it is also reflected by the fact that net interest income growth has been fairly healthy in the third quarter.
And lastly, in terms of this resolution on the corporate accounts, does the current real estate environment delays the further resolution and maybe when we were expecting the recovery? So obviously it's delayed a bit, but were we nearing or maybe in a very advanced stage? And now maybe because of the environment, it might not happen for another quarter or two?
No, actually, for us, in one of our major accounts where we were expecting recovery, it's not held up or getting delayed because of the environment. It has got into a legal tangle. Okay. And other than that, it's okay. I mean, resolutions have not been affected by this for our company at least.
See, the resolution takes time because of the legality and all that associated challenges. It takes time, but the underlying security still, I would say, is, the value has not depreciated on the underlying security. Rather, I would say that probably the value of the security underlying has increased or appreciated. And it actually is borne out by the fact that in the one resolution that we have been able to do just a couple of quarters back, we had been able to recover not only the full principal, but also a good portion of the interest.
Okay. Yeah. Thanks a lot.
Thank you. The next question is from the line of Abhijit Tibrewal from ICICI Securities. Please go ahead.
Yes, sir. Thanks for taking my question. I had a couple of questions. So, firstly, I missed during your opening remarks, when was the last 20 bips hiking lending rates affected? Was it last quarter or this month?
No, see, current fiscal for the 9-month period ending 31st December, we did 4 rate hikes starting 1st of July. So till 31st December, we made a hike of total of 60 basis points. So Q3 was the first quarter in which the advantage of this full 60 basis point hike the company could get. We have made another hike of 10 basis points starting 1st January.
Okay, I got it. Thanks.
So now it is 70 basis points total during the current fiscal.
Okay. And so just to follow up on your ECL provisioning, if I understand right, last quarter your stage 1 provisioning was around 279 crores, which has come down to 4.7 crores now. Similarly, stage 2 provisioning, which was 111 crores, is down to 1.9 crores now. So the impression that I get is, stage 1, stage 2 provisionings have become insignificant now, and most of it has moved to stage 3, which is why if we see there were actually no provisionings in the quarter, rather a write back of 3.1 crores. So how is there such volatility from 279 crores down to 4.7 crores stage 1?
Yeah, I will explain to you. In the second quarter, that is the September quarter, there was, if you recollect, in the call also we had mentioned that the difference between the NHB provisioning and ECL provisioning, we had not written back to the P&L, but we have retained in the books. That we had very clearly indicated that there was the ECL provisions were much less as compared to the provisions that we were holding on the books as per the NHB provisioning norms. And at the same time, we had allocated it to each of these stages because there was no specific formula for fitting it into specific stage. Now in this quarter, what we have done, the same provisions, we have reallocated within the 3 stages, and obviously the bulk of it will naturally get into the stage 3.
Okay, all right. I recall that, yeah, thanks. And so just a follow-up on that as well. While stage 1 and stage 2 are 4.7 crores and 1.9 crores respectively, translating into what, 2 bips, is that the level of provisions that we need for stage 1 and stage 2?
Yeah, see, actually that is something which has been arrived at after utilizing that formula. That formula has driven this result. So we have applied that actually. Right. That model we have applied, and that is the result of that model.
I get that. Okay, thanks. And just a few more data keeping questions. So what were the yield on advances in Q3? You've already shared 9M numbers.
See, I do not have specifically for the third quarter in terms of you want the cumulative or the incremental? Incremental.
I want the cumulative Q3.
Cumulative as on 31st of December on the entire book. The total, the yield on the retail side was 10.25, and on the project was 13.45.
13.45, yeah, thanks. And what was the quantum of incremental borrowings in Q3?
Incremental borrowings, as I shared with you, about 20,000 crores we had borrowed from NCDs, about 9,000 crores we had borrowed from commercial paper, so that is about close to 29,000 crores, about 1,000 crores from public deposits. And banks also we have received, but we have repaid also to the banks. So that will be net about, say, 2,000 to 3,000 crores.
So we received in the third quarter and we repaid it back, is it?
Yeah.
Okay. And would you be able to share your net worth and the balance sheet size as on December 31st?
Total assets in terms of home loans was 1,81,698 crores. But full balance sheet is not required to be published for the 9 months.
Okay.
6 months is the published and audited numbers which will be there on record.
And similarly for net worth as well?
Yeah.
Okay, all right. And just one last thing. This quarter, again, you have published the split between your interest income on individual loans and project loans.
Correct.
Will you be able to give the same split for the last quarter?
Yeah, I think I should be able to give that to you as well. You want for the September quarter, right?
For the September quarter, that's right.
Let me see if otherwise we'll share it with you separately.
Sure. That will be very helpful, and thanks for taking my questions. Wish you the very best.
Thank you. A reminder to all the participants, in order to ensure that management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Digant Haria from Antique Stock Broking. Please go ahead.
Yeah, sir, what would be the lowest home loan rate that we have given to our customer?
When?
Recently.
No, during quarter it was lowest means, it's as per the published rates only, it's 8.80.
Okay, 8.80. Okay, sir.
During Q3.
Okay, sir. And, sir, one more question is, when will we start accelerating our disbursement from 9,000 crores that we have in our individual home loan?
Sorry? No, I didn't get your point.
So the home loan, disbursement in the home loan, that has been for 9,000 crores for last couple of quarters. So when will we start accelerating that figure?
No, we would like to take it much higher, but home loan as it is, the growth rates that we are experiencing from the 2-3 big metros is very muted. And for some of the quarters like Q4 quarter, usually this 9,000 goes up substantially. Substantially, I mean, say maybe 12,000 crores or something.
Okay.
So this Q4 we should be able to do 11,000, 12,000 crores.
Okay, sir. Thank you, sir. That's my question.
Thank you. The next question is from the line of Preeti from UTI Mutual Fund. Please go ahead.
Hi, thanks for taking my question. So my question is on the asset quality. So if you see our NPAs, it has almost tripled since March 17, and of course on a low base. But we have seen this trend sustaining for 3 quarters now, so that rules out any seasonality factor. And if we see our self-employed share has also come down to 14%. And we have not observed this trend, especially in the salaried class, in any other NBFC. So is there any specific to LIC, or especially with respect to the central or state government employees? And also the question applies to LAP as well, because our past interactions have suggested that this is a very safe LAP and some 12 lakh ticket size and very low LTV. So why are we observing this trend, and why is it in an isolated manner?
No, the two points I would like to make. Number one is that, yeah, it has gone up. There are two opinions about it. But it's not, as I said earlier also, it's not specific to an area or a segment like that. We have, in fact, improved upon our recovery mechanism also. The reviews have been more, the regional meets have been called for our monitoring people also. But still, it's going on, and still we expect that probably Q4 we may see a reversal of things. The non-home segment also is, the ratio for that segment is higher than the home loan segment, and together they are giving me a ratio of 0.93% as on 31st of December.
So, but what do you attribute this to? Was it like there was some slip-off in the underwriting process that we followed in last 3 years? I mean, how should we see this?
No, it's not that. I mean, I can't say that there's some problem of job generation or job continuation or something like that. We are not attributing this to anything of that sort. But the fact remains, of course, that still in our salaried class also, though the delinquencies have not been that high, that much, but as compared to previous levels, they have gone up.
Okay, so
it can be in some cases because of some temporary financial problems. It's more like a case of a delayed payment.
Okay. Thanks for that.
Thank you. The next question is from the line of Piran Engineer from Motilal Oswal. Please go ahead.
Yeah, hi sir. Thanks for taking my question. Most of them have been answered, but I just want a couple of clarifications. So you mentioned you raised 20,000 crores via NCDs and 9,000 via CP. That's for third quarter or for 9 months?
That is for third quarter.
In that case, what is the sort of liquidity you're sitting on the balance sheet? Because on an average, your repayments of borrowings are 6,000-7,000 crores per quarter, and your loan book has increased 5,000 crores sequentially. So why are you sitting on excess liquidity of some 20,000 crores or so?
No, that is not the number. It is actually a small fraction of that number, because what we have used is that we have utilized those borrowings to actually retire some of the bank loans that we had taken.
Fair enough. So how much of your borrowings would you have repaid in this quarter?
So the borrowings that we have repaid during the quarter will be around 15 to 18,000 crores.
Okay, that much.
Yeah.
Okay. And just the second thing is on your builder loan, how much is to, like the corporate balance sheet, and how much is to projects?
Mostly, I would say corporate balance sheet we don't lend.
As in term loans?
It is only to SPV level, which is construction linked finance.
Okay, and how much of it is residential versus commercial?
95% will be residential.
94 plus 6, to be exact.
Okay, got it. Okay, that's all from my end. Thank you and all the best.
Thank you. The next question is from the line of Amit Nanavati from Nomura Securities. Please go ahead.
Yeah, hi sir. Just wanted to check on the modification adjustments again. So just what you explained was basically with the correction in interest rates, you effectively it's an NPV hit that you would have taken in the base last year. Would that also mean that this quarter, this year, with increasing rates and plus the benefits also flowing through of that NPV loss, the margins to that extent would be overstated? Is that a fair thing to think?
Unfortunately, no, because principle of conservatism says that you factor in for all possible dilutions and losses, but don't take credit of any gains.
Okay, but as you increase the rate, so you're getting the actual realized increase and you took the negative impact in the base itself, right? So
yes.
Otherwise you would have had an offsetting force in this quarter of some correction in rate and then recent hikes in rate.
No, you have to only, if it is a negative or it's a decline in the future earnings of a particular instrument, that has to be factored in, that has to be accounted for.
And what happens if you increase rates afterwards?
Then it doesn't.
Okay. Okay. And secondly on
actually, you have to understand that when a PLR movement happens, it's a contractual. Right. So it is in the contract itself that when rates go up, the PLR can go up. If the rates come down, it will come down. But when there is a rewriting which happens, it is actually when the customer comes forth and he says that he wants a lower rate of interest, otherwise he will exit. So it is not within the contractual increase or decreases.
Okay.
So that has to be specifically factored. And no customer will come and say that please increase my rates.
Correct. No, but you would be increasing rates any which ways, right? So
no. But that is as per the contract of PLR.
Okay. Okay. And secondly, so the builder NP is down by 200 crores. Sir mentioned that there has been a 60 crore of recovery. What is the balance which led to reduction, and what is the interest recognition which would have happened during the quarter?
200 crores is not the number.
No, is it?
No.
763 to 703.
Okay. Okay. Okay, then it wouldn't be large anyway.
Yeah.
Interest. Okay. Thank you, sir.
Thank you. The next question is from the line of Bhaskar Basu from Jefferies India Limited. Please go ahead.
Yeah, good afternoon. A couple of questions. So firstly, on the loan growth, so as I think someone earlier asked, loan growth has been muted so far, and even this quarter you have attributed it to prudence. But going forward in the current environment, how do you really see your disbursals moving? Are you likely to see any benefit from some of the HFCs kind of facing issues, and how do you think about it?
No, going forward, Q3, as I said before also, we are targeting, working hard to show a loan growth for Q4 in the range of about 15%. This would be very high and really challenging, looking to the fact that last year Q4 was a period where we showed a very high growth rate and the volumes were also large. As far as taking benefits from conditions of some of the HFCs, as I said before also, the market perception that they are not disbursing is not correct. They are not disbursing the riskier segments that they were entering into earlier. So that segment is open, but we were not there in that segment earlier also, and now also we will not venture into the riskier segments. We are concentrating on big volumes and big growth rates in the home loan segment per se, and especially in Tier 2 and Tier 3 cities.
But even within home loans, your growth really has been muted. And I understand about the next quarter, but on a 12-month view, how do you think about it? And also in terms of mix, now that the perceived risk obviously of the project loans have gone up, so how do you think about your mix going forward?
The home loan segment, if I see for the 9-month period, the growth rate is in the range of about 8 to 9%.
Right.
But we have, in the home loan segment, we have been concentrating and showing good growth as far as the affordable segment goes. Last year for the year, we had disbursed about 22,000 number of loans. Current year, as on December only, we have crossed 23,000 numbers. And amount-wise also, last year, the affordable segment had a share of about 7% overall. Currently, as on 31st December, the amount-wise share is about 14%. The mix, as you asked, project loans, last year, year-end, we had ended at around a 5% share of project loans. Currently, it is at 6%. Going ahead also, we do not intend to raise it, take it much higher. I feel that it will end at around the same percentage as on 31st March.
Okay. Second question is on the slippages which we are seeing. Is there any vintage? What would be the vintage of these loans which are slipping, or is there any specific trend around that? Are these recent loans? These are older loans?
No, see, off late, no big additions have come to this thing. Whatever are there, they are about 3-year, 4-year, 5-year-old loans, which are already there. So we haven't observed any trend as such.
No, I mean the slippages which we saw in the retail portfolio in this quarter.
Okay.
Yeah, I'm referring to that.
Okay.
So are there? I mean, what would be the vintage of these loans? Are these loans which you kind of disbursed over the last 12 months or 24 months or 36
they're about
months?
2 to 3 years.
Okay. Okay. Any reason you could attribute to that?
We are seeing, I mean, as I said before, also a very regular follow-up is there. It's more of a delayed payment sort of a thing.
Okay. And my final question is on this net loss on de-recognition of financial instrument. Now, as you have explained that whenever basically the lending rates were kind of reset lower, you had to take the loss. But even this year, I mean, I would understand that's the case last year when generally you were lowering the loan rates. But even in this quarter, there is almost like 135 crores. I would not think you would have written down any loans, I mean, basically reset any loans lower, lending rates lower during the quarter. So what explains a similar number this quarter?
So this similar number is 14 crores. It is there in note number 2.
No, if I look at the P&L, net loss on recognition, yeah, it's about 14 crores. Was the same as 14 crores last year as well. So it's almost the same number.
Yeah. Yes. Hello.
Yeah.
Yeah, it is 14 crores only.
Yeah, 14 crores, but it is same as last year as well. So while last year you would have kind of reset loans lower.
There are still some requests, but the request in terms, if you look at it for the 9 months, the number has come down significantly. For 9 months, the number from 160 crores has come down to 14 or 15 crores. So that actually is, there are still some loans which have been at higher levels, especially in some of the very good builder loan cases. So there have been some requests which we have acceded to.
No, sorry. In fact, the number is 135 crore, isn't it, for this quarter?
It is 14 crores. If you see the note number 2, I think we can discuss it separately, because if you see the note number 2, it is very clearly 14.93 crores as against 159.72 crores.
No, I'm just referring to the SEBI release, wherein in P&L you have this net loss on de-recognition of financial instrument under amortized cost category.
Yeah.
So there is this 135.6 crore number there.
Yeah, that is I think part of the provisioning also, which was there because of the ECL changes. As I mentioned, there are some ECL changes which have happened between the second quarter and third quarter. So that is what is reflected here.
And the minus 3.14 crore is basically what you had alluded to.
Incremental.
Okay, so this is not pertaining to the loan reset as such.
No, that is there in the note number 2, Bhaskar.
Okay.
And which you will find in the reconciliation statement also.
Okay, I'll take that offline. Thank you.
Thank you. A reminder to all the participants, in order to ensure that management is able to address questions from all the participants in the conference, please limit your questions to 1 per participant. Thank you. The next question is from the line of Abhishek Modi from Asit Mehta. Please go ahead.
Thanks for the opportunity. My question is regarding NIMs. NIMs have been dropping a bit, so any idea with regard to that?
Yeah, sorry, can you please repeat yourself? I missed it.
Abhishek, thanks for the opportunity. The NIMs, the net interest margin have been dipping. So any idea with regard, because I think they were 2.58 year over, now it is 2.33.
Yeah, I'll share with you. See, actually NIMs, because of the changes in the income recognition pursuant to the Ind AS, a year-on-year comparison may not be actually accurate, but if you look at sequentially, for the first quarter it was around 2.33 if I'm not mistaken, which increased to 2.35. Now it is 2.33. Now if you look at between the first and the third quarter, the loan book growth, which was in the range of 15.5%, has actually gone up to 16.4%. So though there is a fairly healthy increase in the net interest income, it is not getting reflected in the net interest margins because the asset growth has been higher as compared to the earlier quarters. In fact, the asset growth is highest in almost 3 years. So that is the reason why the NIMs is not reflecting. But if you actually look at the reported spreads, you will find that there is a fairly healthy increase on a year-on-year spreads by 15 basis points and also on a sequential basis by 6 basis points. So I think one has to look into all these 3 things together.
Okay, thanks. The second question is, a part might have been answered, was regarding the retails. I think if I'm right, the majority of your loan portfolio is retail, correct, sir?
Yeah.
Yeah, but with regard, I think somebody had asked that the NPAs have been, in spite of being retail, the gross non-performing assets have been increased. Now, is it because I couldn't able to catch self-employed, the sector category retails have been non-performing, or the other? What is the exact?
Yeah, I think we have replied this some 2-3 times during the call, but actually there is no specific trend vis-a-vis employment or geography.
Okay. So, but why the general basic?
More it is in the nature of some delay rather than a hardcore chronic delinquency.
Sorry, I didn't get to delay.
Delay rather than a hardcore chronic delinquency.
Delay in payments, you're telling.
Yeah.
Yeah. Okay. Thanks. That's from my side. Thanks, sir.
Thank you. Then the next question is from the line of Nishchit Chawate from Kotak Securities. Please go ahead.
Hello.
Yeah, hello.
Yeah, hi. This pertains to, this net loss on modification of loans. I'm just curious, how does this really sit in the balance sheet and, what would be the accumulated amount as on date?
The net loss on you are referring to the note number 2, right?
Yeah. So I'm saying that, I understand, what you did last year and, there was some impact this year as well.
Yeah.
So I'm just saying that this is, kind of more of a notional entry. So
it is a notional entry basically. You are right on that. It's basically a notional entry because it's basically required because of the Ind AS norms only.
Sure. So how does it sit on the balance sheet?
It is actually it is
what is the accumulated amount on this? If you can
accumulated amount, I would believe that most of the going by the actual loan behavior, majority of the rewriting pressure was eased by the first 9 months itself. A small residual will be there for the fourth quarter.
No. What I'm trying to say is that how much amount of this would be sitting on the balance sheet, right?
See, it is not a balance sheet entry per se. It is not going to be a balance sheet entry per se. It is actually notional kind of a recasting. If you look at it in the Ind AS reconciliation, if you look at the reconciliation which is provided in the table.
Mm-hmm.
So that will give you the net impact of it. So only the balance, the net of the opening and the closing will reflect in the balance sheet.
So your opening net worth would also be lower. I mean, this is obviously for the quarter, but your opening net worth would also be lower to that extent because of
Yes.
And any quantum you can share as to how much?
Right now, we don't have a quantum to share, but this is the 9 months figure which has been there.
Sure. Great. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would like to hand the conference over to the management for closing comments.
Thank you everyone for participating. We were now looking forward to a good Q4 ahead. We are concentrating on good disbursement, especially in the home loan segment, and there also we will be concentrating more on growth on the affordable housing front. The second point under consideration and action is the reduction in GNPAs during Q4. As was said during the conference also, we were not and we will not be very aggressive in the project loan takeovers in Q4 also. At the end of the year, we are looking forward to portfolio growth in excess of 16%. The income levels should also continue to grow at the same level because, as I said, we have done a 10 basis point hike in PLR as on 1st January 2019 also, taking it a total of 70 BPS hike during the current fiscal, which should help us in improving our income also. And consequently, because we have currently floating assets in excess of about 80%, that should also help us in getting more income. Thank you, friends. Thank you for joining the con call.
Thank you. On behalf of